The first stock that we have on our radar, and this is of course for good reason because of volumes, but not only that, Asian Paints has announced its earnings, and because of that, we're actually looking at a lot of volumes being built. Now, remember that over the last few days, naturally in the run-up to the earnings, we've had substantial volumes building up anyway in the cash markets. But what was really interesting today was that while it opened with a lot of weakness, substantial weakness, that weakness was bought into. And at the moment, Asian Paints is considerably off its day's low. Sure, it is down as much as 2%, but let's start with the basics. At the moment, Mahima, what's happening with Asian Paints and what are the numbers telling us about?
Right, Agam. So basically, the numbers were not up to the estimates that analysts, the street had. Revenue was down around 2%, EBITDA was down around 20%. Margins have taken a significant hit from 23% to 18% at present, and net profit was down roughly 25%. So overall numbers were quite disappointing, and now revenue was down 2% despite the decorative volume growth was around 7%. And basically, revenue drop was because of adverse product mix and the price cut that was taken earlier. Right. Now, the price hikes, of course, have been taken post 22nd of July. So the entire quarter was definitely affected by the price cuts earlier. And overall, EBITDA and PAT were impacted due to a couple of reasons. First one being higher employee cost, second one being higher OPEX, and third one, inflation in the entire raw material prices. Now, in terms of the con call highlights, well, the management has suggested that they're seeing early signs of green shoots in rural demand. They've also said that the tier 3 and 4 towns, the growth was slightly better than that of tier 1 and tier 2. And overall, what they've guided is that raw material inflationary expected to be around 1.5% in second quarter. And they've guided that another 1% hike is quite possible in the coming quarter as well. And what they've said is that they're aiming for a double-digit volume growth, which was around 7% for this quarter. But they've maintained that they will come up with a double-digit volume growth, and they endeavor to keep the gap between value and volume around 5 to 6%. Now, Agam, like you mentioned at the start of the show, that the stock today has recovered from its day's lows. Can you explain why is that?
Sure. So a bunch of things here, Mahima. Firstly, let's pull up the volumes numbers if it's possible to talk about when it comes to the cash market. Or in fact, let's just pull out the way Asian Paints has moved over the last 5 or 6 odd sessions, perhaps a week. And you will realize that when it comes to this counter and the way things are moving as far as Asian Paints is concerned, before the earnings came through, it made an ever so slight shift upwards. This is just the 5 days. If we can have a month, it'll be a better viewing, because it's over the month you will notice. Well, the movement actually began on roughly about, I would say, maybe the Tuesday, July 9th, July 10th. And that's where you did see Asian Paints move substantially higher, as much as 3% on July 10th. July 10th was about last week, and since then it actually made a high of around 3,040. So it had moved well over the mark of that. And in the meantime, since the 10th of July, it's also made a lot in terms of your cash market volumes. So naturally, given the fact that it moved from 2,900 all the way to over 3,000 rupees per share, on an absolute percentage basis, it's not much. But well, remember that because this is available in futures and options space, this is also leverage, and hence that 100-point up move on a leverage basis is significant, and which means that there were a lot of longs being built into the system. But after it did make a substantial high back on last Friday, that's the 12th, it actually came off quite a bit. And that's where you did see a lot of your positions being squared off, and perhaps potentially some shorts being built into the system. So a lot of your earlier longs being forced out of the question, and then some shorts building in. And today, once we had a confirmation of sorts where, in fact, the numbers were not that good, where we saw the covering of shorts from day's lows. So a lot of these shorters took advantage, where the stock in fact went all the way to around 2,850 and below that. Since then, it has recovered and substantially moved upwards. So on an intraday basis, of course, it is considerably off day's lows. What's really interesting is, and of course, I've had our research team help me out with the numbers as well. We're looking at an open interest here in terms of the futures at around a one-year high around $580 million. And naturally, the most, the most important strikes in this case will be 3,000 on the higher end and 29,000 on the lower end, and perhaps unexpected lines. But remember that in the morning it had gone below the mark of 2,900, so there was a lot of volatility. So these are some of those interesting ways by which a lot of players have played Asian Paints, but it's been one of those counters where I reckon that majority of the players out here have not made money. So that's how Asian Paints has panned out. But Varsha, what are brokerages saying as far as Asian Paints concerned?
Well, Agam, I have 3 brokerages wherein they've given views on Asian Paints. So starting with City, where they've rated sell, and they've cut the target price from 2,600 to 2,400. Now they expect 8% gap in volume and value near term, and in FY23 they're expecting 3% of growth in revenue followed by EBITDA margin of 18.7%, while they expect EPS decline of almost 13% year on year, and they expect to see impact by Birla Opus, which is to be launching in the industry. Then we do have JP Morgan, wherein they've rated neutral to the company, and they expect the company's success in premium segments will be crucial according to the brokerage firm, and they expect negative sharp price reaction. And lastly, we have Jefferies on Asian Paints, wherein they have retained underperform for the company, and according to them, the valuations which are trading at 50x are expensive. So, yeah, these are all the brokerages' views on the Asian Paints.
Okay, so that's as far as brokerages are concerned, Mahima. But, moving on, if you consider why UBS is bullish on this one.
Yeah, so it's interesting to see that a slew of brokerages came in today, and almost everybody has cut their target prices and given either a neutral rating or a sell rating.
Right.
UBS has come out with a note where they've raised their target price and have said that they've given a buy rating, in fact.
Right.
And if you see the target price, it's at 3650, which is almost a 25% upside from what it's trading at present. The couple of reasons that UBS has maintained, I think what they've said is that they believe strongly in what the management commentary has said in yesterday's con call. They believe that volume growth at present is little subdued. However, the volume growth going ahead will be strong. They've also said that the management has guided the volume versus value gap around 5 to 6%, which they are capable of achieving. They've also said that Q1 was largely impacted due to the elections, and post now that the election results have come out, Q2 is expected to have a better performance in terms of getting more contracts in the industrial paint sector. They've also said that the supply chain issue due to Red Sea shipping crisis remains a key monitorable. However, the B2B business will pick up in Q2 FY25, and there will be no impact on demand. This in fact is very interesting. They've said no impact on demand from any competition. Right. So they are factoring in that Birla Opus coming in with such a huge capex and on such a large scale, aiming to become the second largest paint producer. They're saying that this will not impact the market share for Asian Paints. So these are a couple of reasons why Asian Paints why UBS is bullish on Asian Paints.
Sure, among the many brokerages that we have at the price target, there are also, in contrast, brokerages like Jefferies, which have a price target of 2,100 rupees per share, which is a steep decline from here on. JP Morgan, relatively neutral, 2,800 rupees, that's the price target. Even something like a City, the price target is around 2,400 rupees. So we do have, these targets all over the place. But, Varsha, let's talk about price hikes, because that becomes a bit crucial here, given Birla Opus's entry and the way they are playing their pricing here, as well as other peers like Berger Paints.
So yes, Agam. So recently, Asian Paints and Berger Paints, have started raising prices to cope up with the higher costs that they are facing. So Asian Paints have increased prices by almost 1% at portfolio level, which will be with effect from July 22nd. And rival Berger Paints to confirm to NDTV Profit that they are implementing a price hike of around 1.5%. Now, after 12 to 18 months of price reduction. These companies are now implementing price hikes. Other companies will likely follow the suit in next few days. Now, while price increases in the third quarter is of no surprise, as paint companies normally increase the prices just before the festive season, the fact is that they have increased prices before the monsoon season as well. And also, being, although there is a low demand, they are still comfortable raising prices, and these price hikes shows that the pricing power of paint companies remain intact even after the entry of Birla Opus.
Okay, that's as far as your valuations are concerned, but can we talk about valuations as well, Mahima? At the moment, how does that stack up with its peers?
Absolutely, Agam. So, if we see the current valuations, all three paint companies, that is Asian Paints, Berger and Indigo Paints, are pretty much in line, where Asian Paints has a PE of around 50, Berger Paints is at 51 and Indigo Paints is at 47 times.
Right.
However, it's important to see the estimates that Bloomberg has for all three companies. For FY26, the PE is least for Indigo Paints, that is 35 times, Berger around 45 times, and Asian Paints around 48 times. However, even at 48 times, I feel that Asian Paints valuations look pretty much expensive, which is exactly what one of the brokerage notes also mentioned.
Yeah, it's actually quite curious because we're actually looking at Asian Paints valuations going over Berger Paints. Historically speaking, Berger Paints was just at a tight bit of premium to Asian Paints, but that's as far as your valuations are concerned. Again, in terms of the way a lot of these companies have moved, and perhaps I can talk about Asian Paints, Berger Paints, and Indigo. There's been a varied movement. So over the past perhaps 1 year, we've actually seen Asian Paints decline by around 17.5%, but Berger Paints was down 8.5%, and Indigo Paints, in contrast, was down just 1%. But perhaps for good reason too, because if you notice that, the valuations have also had a part to play. Remember that all these companies are very well established, blue chip players with good credentials as far as the street is concerned. So, all in all, it largely should be on level. That's as far as these paint companies are concerned.